I invite Mr. Tito Namu, is a senior trader at Absa Securities, to take us through the intricacies of executing a trade on the new gold ETF. Over to you, Mr. Namu.
Okay, thank you very much, Bidher. I'm sure you can hear me, right? Yeah. Well, I guess I'll begin with a very short history background of the ETF. The ETF was listed back in March 2017 at a listing price of 1,250 shillings per share. It can be found on the NSE under the ticker GLD. I guess the key difference between this equity and other equities is the market making factor. And so as a market maker, we are tasked with providing a two-way quote on the price of gold through every session. This means that we'll give you a buying price and a selling price on any day. This makes us the buyer or seller of last resort, and pretty much a liquidity provider in the market. The pricing around the ETF might be the next thing I'll go into, and how we come up with the price on a daily basis is we take the USD spot dollar price of gold. So that's the spot price of gold in the US markets. And then we multiply that by the Kenya USD pair. So the spot price of the dollar in Kenya on the day or at the moment, and multiply that again by 100 for you to achieve the price of 100 shares, which is also equivalent to 1 ounce of gold. That the entire fund has an allocation fee of 0.3%, but this is an annualized factor. You really do not get to feel the impact of this discount factor. See, I'd call it a discount factor for that matter. Now, going into how to purchase the ETF. Well, it's pretty simple actually. All you have to do is call your broker. Your broker shall then get in touch with the Absa New Gold Desk, which is represented by Absa Securities here in Kenya. Once that phone call is made, we shall give you, like I mentioned, the spot price of gold, and if agreeable on that price, then it's up to you to set the quantity that you'd like to execute, and we'll provide the shares for you to buy. The same goes for when you want to sell. We would be there. We would stand in place to give you a price of the ETF on the day that we would be able to buy back. I guess one more thing to mention would be the performance year to date. We've seen about a 31.12% performance year to date. Over the last 3 years since listing, we've had about a 41% improvement in share price since listing, from 1250 to 2100 or 2050 as it was just at the close of the market today. I guess that's pretty much it from me, unless there's anything else. Back to you, Mbita. Yeah.
Much for having been with us for the last 1.5 hours. I will be taking the final questions in as far as the gold ETF is concerned, and then we will be closing in about 5 minutes. A quick question for you, Tito. How do you go about investing in this? Do you invest in local shillings, or are you coming to the NSC and coming with hard currency, in other words, dollars?
So no, as it's listed on the Nairobi Securities Exchange, then you'd be transacting in Kenya shillings. The USD KES factor is just due to the fact that we have to convert the dollar price of the metal before availing it over to the investors here in Kenya. Okay. So no, the short answer is you trade in Kenya shillings like any other stock.
All right, and then we have one other question from Justice Agoti, and he's asking, what efforts are there to create more awareness, especially given the fact that you are a market maker? And I think there's also another quick question on being a market maker. How can you look at demand and supply? Are you able to fit demand as it comes through, as well as to be able to take on supply when it comes onto the market? Over to you, Tito.
Yeah, well, let me start with your second question. I'll need you to repeat the first one as well. I missed a bit of that.
Okay.
So in terms of demand and supply, when we listed the new gold ETF back in 2017, we listed about 400,000 units. Since then, I believe at the end of 2018, we reduced this holding to about 150,000 units. This was just to mitigate the costs arising from the custodial holding, etc. Since the beginning of the listing, well, the first 3 years was a very slow period. We only managed to sell 8,000 units. However, this year we've sold more than 75% of the entire listing. But this should not give any investor any jitters around whether or not you'll be able to get the shares if you require them. We do have an arrangement with the CDSE here in Kenya, and it'll take 3 to 5 days for us to credit the ETF with more securities on and as is needed. What was your first question, Mbita?
Retail investors? And secondly, what are the affiliated costs and or taxes in terms of trading the gold ETF locally? Over to you, Tito.
Okay, well, I'd say that the ETF as it's currently structured might be out of reach for most retail investors. I mean, being that you must purchase a minimum of 100 shares, which is equivalent to 1 ounce, and in lots, consecutive lots of 100 thereafter. In terms of costs, just the normal statutory fees applies. That's your CMA levies, your NSE levies, your stamp duty, etc., and whatever your local stockbroker will charge you. So I believe that it's a sliding scale in terms of what different brokers charge, but I believe it's anywhere between 0.75% to 2% for retail investors. Thank you.
Okay, thank you. That is all the time that we had, ladies and gentlemen. We are coming to the tail end of this conversation. I'll hand it over briefly to Tito to just give us a brief vote of thanks from the ABSA team, and then I will also close that and bring this room to order, and then we can exit. So bear with us for the next 2 to 3 minutes. I'd continue to encourage you, put up your questions up there because we have your details, and I am sure that we'll find a way to be able to continue asking your questions and to answer your questions. If nothing else, to be able to give you all the information that you need to be able to consider and make an investment in the new gold ETF, which is the hashtag GLD. Over to you, Tito, for the closing remarks as well as a vote of thanks from the ABSA team. Tito.
Yeah, well, Sana beat there. Like I said, we've been drumming this drum around the new gold ETF over the last 3 years, and uptake has been pretty slow. However, I can tell you that as Nahash and Ali on mentioned, it's more of a long-term investment and one that is that comes to play during times of volatility as we are experiencing right now. So I'd urge the local investment community to seriously consider this asset class in your portfolios as a hedge and obviously for capital gains. Like I said, year to date, we've made already 30% plus on the ETF. Outside that, I mean, I'd just like to give a warm thanks from the ABSA team, the ABSA family here, and say a big thank you to all the panelists and the attendees. Remember, here at ABSA, we're passionate about what we do. We're bold enough to bring in new products such as this in a market that has never seen such products, and we're ready to serve you. So feel free to get in touch with the ABSA Securities desk. I believe contacts shall be linked to this webinar, although just very briefly, our direct lines are 020 425 597 or 598.
Okay, so this is the tail end of this conversation.